Okay, folks, this is a quick little ditty on euro dollar. It's a 15-minute chart, and I'll give you a little bit of a example of the optimal trade entry. It's a series of videos that you can study on the YouTube channel. And a real quick public announcement about the YouTube channel. In case you haven't already noticed, I am no longer on Twitter, and I'm no longer on Instagram. So all of my social media will be focused primarily on my Inner Circle Trader YouTube channel, as you can see here. And instead of Twitter and Instagram, I'm using the community tab on the YouTube channel. So when we go to this tab on my YouTube channel, you can see posts and such the same way I was doing on Twitter, but just not as much. So it'll be a little bit more concise and more reader friendly, and I'll try to keep my tomfoolery to a minimum. No promises though. And so we're looking at the euro dollar here, and I want you to consider what you have here in the price structure. Clearly you can see that we had a breakdown, and we created equal highs ahead of what? The New York Open. The market trades lower, rejects, trades higher, comes back up into these three candles here. These three candles are considered one bearish ICT order block. And optimal trade entry, pay particular attention to the candles bodies, because that's going to be important in a moment. And the market breaks down, comes back in, expands lower, lower, one more time, and finally drives into this low here. And most importantly, this was last week's Friday low, so it's going to be important to keep that in mind, because that's what this move is reaching for. Okay, so try not to consider any of the Sunday data. Sunday's data can be helpful sometimes, but not all the time. But for a general rule of thumb, just keep Sunday's data out of your analysis, and you'll be probably better served by doing so. Alright, so here's Friday's low, and we have the market creates a run. It just pierces Friday's low a little bit here on the London Open. We trade down right into the New York Open. There's a small little optimal trade entry in here. You can look at that on your 5-minute chart, and that will be a run on these relative equal highs. Expands up, optimal trade entry, high, low, New York session. What's it going to aim for? Friday's low. So you can use the 62% retracement level here, and using a 20 pip stop loss, that would put your stop just about in this high here, so you'd be able to withstand all of the expansion beyond the 79% retracement level, but specifically allowing to the bearish order block would be all three candles together. So the market creates an optimal trade entry short here and starts to trade lower and sweeps Friday's low. Again, disregard this, because this is something that took place in the London session. So now the new session begins. We trade up, create another opportunity to go short. Targets would be Friday's low, and now the intraday low that's formed today. So I just wanted to share that just as a continuing reminder of the very simple pattern I shared very publicly and free. You don't have to worry about paying for any subscriptions or paying for a course or anything like that. Just go through the YouTube channel that I've posted comments and commentary with. Each individual setup as examples. There's 20 individual days that have been shared with you publicly on my YouTube channel for the optimal trade entry. So reaching for previous day's highs and lows, looking for time of day, rebalancing to a specific point of overbought or oversold. In this case, we would be overbought. We don't need any kind of overbought and oversold indicator to get to that decision, and the market has delivered a tradable price run to a point of liquidity that would otherwise be forgotten, because we've already went below it here and here, but we're in a new trading week. So the new trading week on Mondays, you always want to refer to Friday's data. Try not to worry too much about Sunday's data unless it's a gap. If we have a gap up, then look for the gap to be filled in and then trade in the direction of the gap opening. Or if the gap's down on Sunday's opening, look for a fill-in of the gap, trading higher, and then trading in the direction of the gap opening lower. So that's it for today. Hopefully you found this insightful. Until next time, wish you good luck and good trading.